joined us on Market Cafe this Tuesday morning. I'm Ashesha Advalyu. With me is Kanishka Sarkar. And the biggest news this morning is that Donald Trump has now taken a pause once again on steep US tariffs that were levied against China. And just hours before they were set to snap back to 145%, US President Donald Trump has now signed an executive order extending the tariff deadline by as much as 90 days, pushing it to mid-November. The move follows trade talks in Stockholm, where negotiators from both countries signaled progress. In fact, over the weekend, Trump urged China to quadruple its U.S. soybean purchases, a comment that sent Chicago soybean prices climbing, though no official agreement has been confirmed so far. So that's the biggest story this morning. But Kanishka, American markets ended in the red yesterday, isn't it? And all eyes will be on inflation data today.
Absolutely. Stocks fell across the board on Wall Street in that overnight session. The Dow Jones Industrial Average that lost about 200 points or about 0.5%. The S&P 500 that slipped about 0.2%, while the Nasdaq Composite that shed 0.3%. Now, while we did see a downtrend coming in on the Wall Street, it wasn't a major fall. In fact, the street seems to have largely ignored Trump's decision earlier to extend his 90-day pause on the higher levies on Chinese goods. Now, analysts say that investors seem to be betting on the upcoming interest rate cuts and counting on them to counteract the drag from tariffs. Today, the street will be watching out for, as you said, the Consumer Price Index report, hoping to gather potential insights into how the Federal Reserve will handle short-term interest rates, especially as the S&P 500 that hovers near that all-time high. Meanwhile, Bank of America thinks that Federal Reserve may want to hold off cutting interest rates at the end of its next FOMC meeting in the wake of the latest jobs report. So let's see how that pans out. But of course, the major development remains to be the tariff deadline that has been extended for China.
That is the biggest headline, and that continues to impact the oil market as well. There is optimism that perhaps we could see some kind of negotiations between the two countries over the course of the next 90 days, and trade deals could be signed. We are seeing some kind of optimism because of which Brent crude is trading with gains of nearly a quarter percent today morning to trade near that $66.8 per barrel mark. And remember, Brent crude is gaining for the third consecutive day today. All eyes will be on US President Donald Trump and Russian President Vladimir Putin's meeting on Friday. And perhaps, if at all a peace deal is signed between Ukraine and Russia basis that, then Russian supply is likely to increase. That, of course, will weigh heavy on oil prices, and oil prices could fall if at all that were to happen. But yes, for now, oil is gaining for the third straight day. Today it is up 0.3% near that $66.8 per barrel mark. But as far as gold is concerned, some positive clarification that has come in from US President Donald Trump. Remember, there was a lot of uncertainty on whether import of gold into the United States will levy additional tariffs. But now Trump has clarified that no additional tariffs will be levied on import of gold into the US. That's a positive. Gold, of course, is trading with gains of nearly 0.4% today. It is trading near that $3,350 per ounce mark. But remember, it ended with a downtick of over 1.5% yesterday. So yes, Kanishka, oil market that seems to be impacted by the new announcement that came in of a tariff deadline extension for China. But gold market continues to remain steady.
Absolutely, though that's how the commodity markets are looking. But let's also shift focus and see how our Indian markets fared yesterday. Now, the Wall Street saw a strong start to the week with Nifty closing over 200 points higher at that 24,585 level. Sensex do gain over 700 points. Now, most major sectoral indices, they ended the day in green. Now, let's go across to Snehi to get us a roundup of all the market action yesterday.
Well, yes, good morning. A very good day of trade is what we've seen yesterday, and much awaited for and much welcomed after the kind of consolidation that we've seen for 6 consecutive weeks. Nifty managed to end in the green yesterday, and above the 24,580 mark, so 585 to be precise, is where we've ended on the Nifty. A good uptick of 200 points coming in from the day's low, and about a 0.9% jump is what we've seen in the Nifty. Similar moves coming in for Sensex, very healthy jump over there. Nifty Bank too aided support and almost a percent jump is what we've seen on the Nifty Bank as well. The Nifty Mid-Cap Index was absolutely in tandem with the benchmarks. The Nifty Small Cap was lagging, but not too much behind. Good moves coming in across the board. It was actually names like Adani Enterprises, Tata Motors on the back of its earnings, Eternal, Grasim, SBI also another earnings candidate that was reacting in trade, Apollo Hospitals. All of these stocks were in focus and were aiding some joy to the Nifty. On the other side, it was a barely select number of stocks like Hero Moto, Hindalco, BEL, Bajaj Finance and Maruti Suzuki. A couple of these stocks that were causing some pressure to the Nifty, but nonetheless Nifty has broken about that 24,600 mark as well yesterday, and then we slightly receded from the day's high. But if you take a look at how the sectoral move has been, all the sectors managed to close in the green, and PSU Banks was your biggest gainer yesterday, up 2% as a sector. And internally also Indian Bank, Union Bank, PNB, SBI, Bank of Baroda, all of these stocks have done very well in yesterday's trade. Following that, you had Nifty Realty with names like Prestige up 3%, Oberoi, DLF, Lotha, Phoenix, all of them have done very well. The least gaining sector was also Nifty Metals. So some of the names like Adani, like Jindal Steel, SAIL, Tata Steel, JSW Steel have done well. On the flip side, NMDC, Vedanta caused some pressure to this sector, which is why it was the least gaining sector. So that's a roundup of the kind of trade we've seen yesterday, with PSU Banks, Realty, your top gainers, followed by Auto, Banks, Pharma, FMCG, Energy and IT, and Nifty Metal was your least gaining sector. All eyes are going to be on the back of how the performance of the trade session is today, because we have 3 Nifty earnings coming out with their numbers, and how these white good stocks that we've seen in yesterday's trade, if they are able to reverse all of those losses we saw yesterday. Obviously on the back of AMFI numbers, the markets took a high, but if that high sustains today, is going to be key to watch out for.
Well, yes, and Nifty ended near that 24,580 mark in yesterday's trade to end nearly 220 points higher. Snehi, thanks so much for joining us with all those details. But what is the market setup looking like, and what to make of the global tariff trade war that we are seeing? To discuss exactly this, we are now joined by Mr. Peter Cardillo, Chief Market Economist at Spartan Capital Securities. Peter, morning, and thanks so much for taking your time out and joining us here on ET Now. What do you make of the latest announcement that has come in from Trump, where he has extended the deadline to impose additional tariffs on China by 90 days? What does this mean for other economies, especially India, say, where additional tariffs have been levied?
Well, it basically puts everything back on hold. So it gives the markets more time to assess what may not happen with China and India as well. So it's Trump flipping again, and that is an indication that China is a tough hand to deal with. And so in one respect, that's good news, and in another respect, it's not, because we really don't know how this is going to end up. But obviously, the markets are beginning to realize that every time Trump blinks or changes his mind, that it just puts one more big question mark. So I think in terms of the market today, I don't think it's going to have much of an effect. The major focus will be on the inflation data.
That's right. Hi, Peter. This is Kanishka also joining in. You were just mentioning that the major focus is going to be on the inflation data that's due later today for the U.S. markets. But, earlier you have mentioned that even a baseline tariff of 10 to 15%, that would be inflationary for the U.S. But now those tariffs, nearly 40% of tariffs for some countries, they have come into play. So how do you see all of this panning out, especially for the U.S. consumer? Because that's the one now who's going to pay more, if higher import duties are imposed.
Absolutely. Even if you get a baseline of 10 plus on inflation, which so far it's been at 15%, but let's assume you say the average will be somewhere between 10 and 15. That's inflationary. It's not going to send inflation through the roof, but it is inflationary. And I think, once again, we're going to see that in today's numbers. We are expecting that type line inflation increases by 0.3%. And the key here will be core inflation, which we're looking for a hike of 0.3%. And of course, on a year-to-yearly basis, it's very possible that we can see inflation tick back up to 3% on a core rate. So that just will give us more confirmation, that tariffs eventually are going to keep inflation elevated, and that the American consumer is the one who's going to pay the price.
American consumer who's going to pay the price, that's the word coming in. But Peter, since we are talking about inflation, in this backdrop, if you can tell us, what are you expecting from Federal Reserve in its meeting in September? There are hopes that perhaps Fed could cut rates as much as 2 rate cuts for the rest of this calendar year. What are your estimates when it comes to Federal Reserve move?
I think we will get rate cuts. There's no, I don't think there's any doubt about that. The economy is slowed and is slowing somewhat rapidly. And we saw that with the employment numbers. Of course, it's not a good combination to see the economy slow and inflation go higher. That's obviously signs of stagflation. But I think that they will move. And I think that, of course, we'll probably get some sort of, I don't want to say confirmation, but certainly insights of that during the August 21st, 23rd Jackson Hole meeting. So I think, there's a good chance, a very good chance, that if the September labor markets come in much weaker, or should actually show negative jobs growth, that the Fed may be forced to cut by 50 basis points. And that would be the two, instead of cutting it 25 and 25, you probably get one big 50 basis point move, and that probably would satisfy it for the remainder of the year. But of course, there's another problem here. And the problem is, do the markets really trust the macro data?
That's right. Thank you so much, Peter, for taking us through what to expect from the Federal Reserve when it comes to rate cuts going forward in the year. On that note, we'll let you go. It was great chatting with you. Thank you for taking us through what these tariffs mean for the rest of the world. Well, let's just focus back to Indian markets again, and let's go to Sharad, who's standing by to give us a snapshot of what the F&O market setup is looking like.
Yesterday saw a good rally coming in the form of relief and short covering in the markets, but FIs in the cash market again turned sellers. Now the F&O setup for today is that India makes comfortable levels of 12 times, and the Nifty PCR changes, they are also at the reasonable range. Nifty, the short covering as expected, change in open interest was roughly 2% when the highest open interest strike price, that ranges for put at 24,400, and for call the level stands at 25,000. Bank Nifty also, there's the same activity happening where there was a short covering, and we had stated earlier that a sell on rise stance would be much better in the current market scenario. The highest open interest strike price for Nifty monthly bank expiry put is also, and call, both of them coming at 57,000 odd levels. Not much change when it comes to the FI shorts, that is also still ranging between 92 to 91 odd %. And the DII long positioning, slight decrease, but still on elevated levels, that's roughly 71 odd %. F&O bank, there is a PNB Housing and RBL Bank also to make it to the list.
Okay, so that's how the F&O setup is looking like for today's trade. Sharad, thanks so much for joining us with all those details. But let's also put the spotlight on all the stocks that will be in focus today. And first up, a whole host of sugar and ethanol related stocks will be in focus on the back of some commentary that has come in from Joint Food Secretary, where he says that government is considering higher allocation of broker token rise for ethanol. In fact, he also goes on to say that government will consider sugar exports after meeting ethanol needs of the country, and they could allow nearly 4 to 5 million tons of sugar for ethanol blending next season. So some important commentary that has come in, because of which all of these ethanol making companies and sugar companies will be in focus on the back of that. Let's also put the spotlight on Novelis, which is Hindalco's wholly owned subsidiary. That one has reported its numbers. Largely a mixed set, because revenue has come in above what the street was working with, but EBITDA per ton has come in at $432 versus street estimates of $450. So that's a tad bit lower than what the street was working with. But the management commentary is on the solid side. They say they are maintaining their long-term EBITDA per ton target of $600 per ton, and their capex plan continues to remain on track, and Bay Minette expansion is likely to be commissioned in the first half of FY26 itself. Lastly, Praj Industries, where again it was a weak set of numbers that have come in. Remember, delay in US transition because of tariffs and weak execution in the domestic market impacted numbers of Praj Industries this time around. Revenue has fallen by about 8% on a year-on-year basis. Margins have come in at 4.9% versus 13.2% that the company had reported same time last year. So weak set of numbers on account of tariffs and weak execution in the domestic market. So these factors continue to weigh heavy as far as Praj's numbers are concerned.
All right, so Praj Industries, Hindalco, because of Novelis results and sugar stocks that are going to be in focus. But let's go across to Sharad and check with him which are the stocks on his radar.
It's almost the fag end of the earnings season, and Bata, largely mixed set of numbers coming in for the company, but the margins that jumped up almost 155 basis points on a year-on-year basis as cost restructuring benefits aided the financials. Also, interestingly, the revenue that was flattish, coming at 942 odd crore rupees, and EBITDA saw a jump of 7.6%. Adjustments were there in the accounting segment. That's why the net profit numbers were on the lower side. Ashoka Buildcon, mixed Q1 numbers coming in, as the execution numbers have also been mixed over the quarter, especially because of the impact of monsoon. But the order book, that is standing at roughly 15,886 crore rupees. Margins jumped up almost 743 basis points on cost reduction initiatives. Muthoot Microfinance, very weak set of numbers coming in as the asset quality deteriorated. The net interest income was also down 17% on a year-on-year basis, and PAT took a hit of almost 95%.
Muthoot Microfinance, Ashoka Buildcon and several other stocks that will continue to remain in focus today. But Varun Dubey is also now joining us. Varun, morning. Tell us which stocks are on your radar this morning.
Good morning. So let me start with Astral, because the company has reported its number and the numbers are weak. If you look at the revenues, they are down by around 1.6%. Even the profitability of the company, that is down by around 32.6%. It has come down from 120 crores to around 81 crores this quarter. And also the operational performance of the company is weak, because the margins of the company, they are down from 15.5% to around 13.6% this quarter. But also remember that the stock is trading near its 50-week low. But yes, the results are weak. Keep an eye on Indian Hotels, because the company would be acquiring 51% stake in ANK Hotels and Pride Hospitality, and this would be for 204 crores. Keep an eye on shipping stocks like GE Shipping, Shipping Corporation of India, because Indian Parliament has passed the Merchant Shipping Bill 2025. A few days ago, it was the Lok Sabha which has passed this bill, and now the bill has finally got the Parliament approval. Also keep an eye on JSW Steel, because it is the Supreme Court that has reserved its verdict in the dispute over Bhushan Power and Steel liquidation. If you remember, this case pertains to the rejection of JSW's resolution plan of around 19,700 crores. So keep an eye on JSW Steel as well.
All right, thank you, Varun, for taking us through that list, and Sharad as well for taking us through all the stocks that are going to be in focus today. But let's also shift focus to some other cues that we need to keep on our radar today, and what the street will be watching out for. And Snehi is here to take us through just that.
Well, yes, lots of cues to watch out for, some very important events to track, and one of them on top of our radar is going to be India's CPI numbers. The inflation print is going to be out, so keep a very close eye on that. But it's not only our market that's going to be reporting the CPI numbers. We also have CPI coming in from US, so this is also going to be very important to watch out for. Other than that, from UK, we have employment data numbers coming out, so watch out for that as well. In terms of global earnings, Wilmar will be in focus, but shifting earnings action back home from Nifty, you have the last three companies of Nifty 50 for Q1 FY26 that will be reporting their numbers: Hindalco, Apollo Hospitals and ONGC, and that is going to be marking the end of Nifty 50 earnings for Q1. Other than that, you have a whole host of companies from the broader market, the likes of Granules, NHPC, Honasa Consumer, Nykaa, Karnataka Bank, Cochin Shipyard, Nazara Tech, Bajaj Hindustan, Jindal Steel, Alchem Labs, a whole host of companies to watch out for, so keep a close eye on these as well. In terms of corporate action and board meetings, Nazara Technologies, along with its earnings, the board is also going to mull stock split and bonus issue tomorrow, so watch out for that. RCF board is going to be mulling fundraising as well, so keep a very close eye on that. ICICI Bank, Rights, Grasim, they will be trading ex-dividend, and it's also going to be the last day to buy the shares of Godrej Consumer, Brigade Enterprises, Concor, Sun TV, Interglobe Aviation, Railtel, NBCZ and Pidilite to be eligible for their dividend eligibility record date if you wish to do so. In terms of AGMs, Berger Paint, VA Tech Wabag, Zydus Life Sciences, Avenue Supermart, HCC, Spark and a whole host of other companies will be hosting their AGMs as well. And lastly, in terms of some other events, also keep a very close eye on OPEC monthly oil market report that will be out as well. A preliminary trade truce between the US and China is set to be expired. It could be extended, so all eyes are going to be on that as well. And Richmond Fed President Thomas Barkin is going to speak, especially important to track after the CPI numbers that we see. So keep a close eye on all of these cues, all of them very important to track.
A whole host of cues to watch out for in trade today. Snehi, thanks so much for joining us. But on that note, we need to slip into a very short break. More news and updates will continue on the other side. Kospi is also up nearly 0.8% as we speak. Hang Seng Index, that one should be up for you on your screens. Largely flat as we speak, 22 points lower for that one. Shanghai Composite Index, that one has opened in the green, 0.3% higher for this index. And ASX 200 has also started with a positive bias, up nearly 0.1% as we speak. Nifty implied open is suggesting a flat start for the Indian market. That one is down nearly 30 points near that 24,596 mark. So Asian markets, Kanishka, have largely opened mixed today morning.
Right, the markets, Asian markets have opened mixed and slightly flat to negative start is what we are expecting for the Indian markets as well. But before we get going with all the news updates further, let me take you through some of the key chats that are coming up next over the next 3 hours on ET now. Well, first up at 9:30 a.m., we'll have Mark Matthews of Julius Baer to take us through all the triggers that the street needs to keep an eye out for. Next up, we have the inflation data coming out today, later in the day, and to discuss the macro setup and what to expect, we'll have Sonal Verma, MD and Chief Economist, India and Asia ex-Japan of Nomura joining us on the show. Next up, to get hold of India's festive pulse, we'll be joined by Sai Giridhar, who's the Vice President at FADA, to understand what kind of discounts are auto dealers offering at this point. Next up, what does government's ethanol push mean for India? To discuss that further, we'll be joined by Deepak Balani, Director General at ISMA. And lastly, at 10:30 a.m., we'll be joined by Ashish Gaikwar, MD of Praj Industries, to discuss what the company's results imply and what's the outlook going forward. All right, on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side.
When the stakes are high and the answers are elusive.
Years. My colleague Samir is now joining us with more details on this. Samir?
Finance Minister Nirmala Sitharaman has introduced the new and the updated version of the Income Tax Bill 2025 in the Parliament. This new bill will replace the old Income Tax Bill 1961. Initially, the bill was introduced in the Parliament in February 2025, and recently on August 8, government withdrew the old Income Tax Bill 1961 from the Parliament. Now, this new or the updated Income Tax Bill incorporates all the 25 recommendations that was given in by the Parliamentary Select Committee led by MP Baijant Panda. The new bill have got couple of new features that aims to bring more sort of clarity, clear the definition, and also to enhance the transparency and the taxpayers base as well. For example, the new bill pushes for becoming more taxpayer friendly. For example, for any genuine reason, a taxpayer misses the deadline to file the return and files the return late than the deadline date, then also the taxpayer can claim the refund amount. In addition to this, the incorporation of the recommendations made by the Parliamentary Committee has also been included. Roughly around 285 recommendations were made. For example, much better clarity of the definitions like the parent company, also the provisions of the religious organizations or the non-profit organization has been made more clear in the new bill. In addition to this, the new bill aims to be more data-driven and the digital-driven bill that will help to simplify the tax structure as well. So with these sort of incorporations, government understands that the new bill will help to bring more transparency, and overall this will also help to increase the taxpayers' base in the country as well.
All right, thank you, Sameer. So the new income tax bill has got the Lok Sabha's nod. Thank you, Sameer, for taking us through all the details on that front. But let's shift focus to India's tariff strategy as well. Now, Foreign and Commerce Secretaries have told Parliamentary Standing Committee on External Affairs that India is hopeful of continuing BTA negotiations with the US, and that the multidimensional ties must not be seen only through the prism of trade. So, Sumita is now joining us with more details on this front.
That's right. We're going to understand from sources that Foreign Secretary Vikram Misri and Commerce Secretary made a detailed presentation before the Parliamentary Standing Committee on External Affairs. In fact, the presentation was on current developments in India's foreign policy with special reference to US-India trade negotiations and tariffs. In fact, officials informed a couple of points to the Parliamentary Committee. In fact, those officials stated that India is hopeful of continuing negotiations on the proposed bilateral trade agreement. The panel also stated that the imposition of high tariffs, that needs to be seen in context of the new US tariff policy at the global level. In fact, Trump administration imposed high tariffs even on its close allies like the EU. That's essentially what the panel stated. It also stated that India has multidimensional ties with the United States and it should not be only seen from the prism of trade. In fact, US was helpful in facilitating the deportation of the Havur Rana to India. That's also what the panel stated, also stating that US supported the resolution passed by UNSC after the Pahalgam terror attack and designated TRF, which was central to that attack which happened in Pahalgam. In fact, the US designated TRF as a terrorist organization.
Sumita, thanks so much for joining us with all those details. But shifting focus to some other stories then, Prime Minister Narendra Modi spoke to Ukrainian President Zelensky, and Prime Minister Modi conveyed India's consistent position on the need for an early and peaceful resolution of the Russia-Ukraine conflict. India remains committed to making every possible contribution in this regard, as well as to further strengthening bilateral ties with Ukraine, the Prime Minister added. Remember, US President Donald Trump is set to meet Russia's President Vladimir Putin on Friday, August 15 in Alaska.
All right, so that's about India's global ties, but let's move on and focus on the Indian auto sector as well. Now, auto majors have announced discounts ahead of the festive season. These discounts range from 25,000 and go up to 2 lakh rupees. Now, what are the key drivers for these cuts, and how is the festive season shaping up for the Indian auto majors? My colleague Nivedana is here to take us through all those details.
Well, the festive theme seems like has begun in full swing for the auto world. We're looking at various discounts that are being offered to consumers as well. And this is what we're looking at, because dealers say that August offers are unusually aggressive this year as automakers, of course, look to clear aging stock and make room for upcoming launches. Now, sales teams and auto dealers in key metro markets told ET now that last year inventory is being sold as well to push that out, and consumer offers are also being offered as part of the festive season with occasions queued up, including Ganesh Chaturthi around the corner and, of course, the window period until Navratri, Diwali as well. As far as hatchbacks are concerned, just looking at some of those models and numbers, Alto K10, you're getting a discount up to 50,000. Wagoner, you're looking at about a 40 to 45 range. Celerio, in fact, is looking at a 40 to 45,000 range. This is if the CNG version you're looking at. If you're looking at sedans as well, the Desire is also getting a really good discount. And Honda City is also getting a good discount this festive season, somewhere between 40 to 50K. When you're also looking at compact SUVs, Brezza, in fact, is getting another discount of 40 to 50,000. But of course, it depends on which markets that we're looking at in terms of key metro cities. But when you're looking at premium SUVs, very interestingly, the Harrier is also getting solid discounts. Innova Krista and the Safari is also getting a discount between 50 to 60,000. But most segments are offering multi-part deals, combining cash discounts, free accessories, in fact, in some cases, exchange bonuses and corporate perks. Dealers expect these offers to stay live until Diwali unless a sudden spike in demand trims that generosity. Will that happen or not, and how will that pan out? Well, we're going to keep you ahead as far as that is concerned.
Nivedna, thanks so much for joining us with all those details. So all eyes will be on upcoming festive season. But shifting focus to some national and global stories then, US President Donald Trump has hit pause once again on steep US tariffs against China. Just hours before they were set to snap up back to 145%, Trump signed an executive order extending the tariff deadline by as much as 90 days, pushing it to mid-November. The move follows trade talks in Stockholm, where negotiators from both countries signaled progress. Over the weekend, Trump also urged China to quadruple its U.S. soybean purchases, a comment that sent Chicago soybean prices climbing, though no official agreement has been confirmed so far. My colleague Sumita Karir is now joining us with more details on this. Sumita, over to you.
Well, US President Donald Trump has reportedly signed an order that delays the reimposition of higher tariffs that were seen earlier this year on Chinese goods. This was just hours before a trade truce was announced between Washington and Beijing. That was due to expire. In fact, the hold on steeper tariffs that will be in place for another 90 days, and that's something that Donald Trump has also posted on his platform Truth Social. Now, while the United States and China slapped escalating tariffs on each other's products this year, reaching the prohibitive triple-digit levels and snarling trade, well, both countries in May, they agreed to temporarily lower them. But their 90-day hold of steeper levies was due to expire today, and which is when this extension came about. In fact, Trump has also recently touted the tariff revenue that his country has collected since the return of White House, stating that we've been dealing very nicely with China. And he additionally added that Beijing also hopes that Washington will strive for positive outcomes on the basis of equality, respect, and mutual benefit. In fact, the full text of Mr. Trump's latest order is yet to be released, but this 90-day extension, that means the truce is set to expire in early November. But even as both the countries, they have reached a pact to cool tensions, the de-escalation, if you've seen, that has been shaky. So that it remains to be seen for how long will an extension come about between US and China until a final trade deal is signed upon.
We've been dealing very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America, and we'll see what happens. They've been dealing quite nicely. The relationship is very good with President Xi and myself.
All right, so that's the latest word coming from Trump on the tariff deadline extension for China. But on that note, we'll take a very short break. Be right back with more news and updates on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.
And in an unprecedented move, Trump is placing the Washington, D.C. Police Department under federal control and deploying 800 National Guard troops, citing what he calls an out-of-control crime problem. It marks the first time a U.S. president has federalized the Metropolitan Police Department. Local leaders fiercely condemn the move, noting Justice Department data which shows that violent crime in D.C. is now at a 30-year low and they are down another 26% this year so far.
To the auto sector as well. Now, Ford is investing $2 billion in its Kentucky assembly plant to build a new line of affordable electric vehicles. This starts with a $30,000 mid-size electric pickup in 2027. The move is part of Ford's Universal EV program and follows a $3 billion battery park project in Michigan, together securing nearly 4,000 jobs. Next up, shifting focus to the IT segment. Now, Trump has made a sudden U-turn on Intel CEO Lip Wutan. Just days after demanding his resignation, Trump praised him on Truth Social, posting him as an amazing success story. Now, Tan, 65, took over Intel amid steep challenges, lagging in AI chips, trailing NVIDIA, and struggling with costly foundry investments. Now, since becoming the CEO, he's announced layoffs, cutbacks to Intel's foundry division, scrap plans for new plants in Germany and Poland, and slowed expansion in Ohio.
Stories then, Trump also says that he wishes to push to win back some territory for Ukraine when he meets Russian President Vladimir Putin in Alaska on Friday. Trump called it a feel-out meeting to gauge if ending the war is really possible, claiming that he'll know within 2 minutes whether a deal can actually be made. He also floated land swap ideas, dismissing Ukraine's stance against ceding territory. Ukrainian President Volodymyr Zelensky has not been invited to the talks.
I'd like to see the best deal that could be made for both parties. You know, it takes two to tango, right? So ultimately, I'll have a meeting next week. I had a great relationship with him, considering the fact that I was not nice to him because of the pipeline. I ended the pipeline. I also gave the javelin. Do you ever hear of a javelin? But I'm going to meet with President Putin, and we're going to see what he has in mind. And if it's a fair deal, I'll reveal it to the European Union leaders and to the NATO leaders, and also to President Zelensky.
All right, so let's keep it with Trump's comments then. Now, Trump says that he has asked NVIDIA for a 20% cut of its China-bound H20 chip sales, eventually settling at 15% after CEO Jensen Huang negotiated with him. Now, Trump has dismissed the H20 as an essentially old chip, claiming Huawei already has a similar model. Now, Trump has also revealed Huang plans another meeting to seek export approvals for NVIDIA's next-gen Blackwell chip. Now, NVIDIA says it hopes new rules will allow U.S. firms to compete in China and globally as well. Let's listen in.
That's the latest and the greatest in the world. Nobody has it. They won't have it for 5 years. But the H20 is obsolete. You know, it's one of those things, but it still has a market. So I said, listen, I want 20% if I'm going to approve this for you, for the country, for our country, for the U.S. I don't want it myself. You know, every time I say like 747, I want, yeah, for the Air Force. So I just wanted. So when I say I want 20, I want for the country. I only care about the country. I don't care about myself. And he said, would you make it 15? So we negotiate a little deal. So he's selling a essentially old chip that Huawei has a similar chip, a chip that does the same thing. And I said, good, if I'm going to give it to you, because they have a, they have a stopper.
That's the word coming in from the U.S. President, but shifting focus to some other domestic stories then. And as the street awaits inflation data numbers, which will be released today, let's go across to Varun to check what the polls are indicating on the same. Varun, good morning.
Good morning. Well, so the Reuters polls actually expects the CPI number to come at around 1.76%, and this would be the 9th straight month where we are seeing a decline in the CPI number, and in fact, a 6th straight month where we are seeing the CPI number below the overall tolerance level of RBI, that is around 4%. And this time the CPI numbers are expected to fall below the 2% mark, that is around 1.76%. If you look at the overall numbers, it is the food inflation that is going to impact the overall CPI number, because it's the vegetable inflation which is on a declining trend, and that would impact the overall CPI number. Also, if you look at the rural and urban CPI number, they have been on a declining trend, and we are expecting them to decline in this month also, that is in the month of July as well, and that will impact the overall CPI numbers for the month of July. Also, if you look at the core CPI number, they are expected to moderate to around 4.22% in the month of July. So overall, if you look, the CPI numbers are expected to decline for a 9th straight month, and they are expected to come at around 8 years low, that is around 1.76%.
76%, that's the broad estimate. Varun, thanks so much for joining us with all those details. So all eyes will be on inflation data today, but Hindalco will also be in focus, because Novelis, which is Hindalco's wholly owned subsidiary, has reported its numbers, and it was largely a mixed bag. Revenue has risen by about 13% on a year-on-year basis, 3% on a sequential basis, and this has come in ahead of what the street was working with. Now remember, as far as EBITDA per ton figure is concerned, that is a slight bit lower versus estimates. We were working with a figure of $450 per ton. It has come in at about $432 per ton. So a slight miss versus estimates. On a sequential basis also, it has deteriorated quite a bit. But management commentary continues to remain very positive. One, of course, companies focused on cost reduction will continue going forward. There is expecting costs to fall by about $100 million by the end of this fiscal, and the company is also targeting cost reduction to the tune of $300 million by FY28. So those are the kind of plans management and company has going forward with respect to reducing their costs. Now, as far as the capex guidance is concerned, that has been maintained in the range of $1.5 to $2.2 million. This is for the rest of this year for FY26. Peak net leverage is also likely to be kept below 3.5x, and the Bay Millet expansion plan, which the company has undertaken, is likely to be commissioned in the second half of calendar year 2026. So capex plans are intact. EBITDA per ton slightly below what the street was working with, but we are not expecting any major knee-jerk reaction on the stock. And also remember, Hindalco will be reporting its standalone numbers today afternoon, so all eyes will be on that stock today.
All right, so all eyes on Hindalco as it will report its numbers today, and also react to Novelis' number that were reported yesterday. But that's all the time that we have on Market Cafe today. But don't go anywhere, as the market will take all the action forward.